Wealthies, welcome back. If you're new here, this is All the Wealth, Wealthmore's wealth building channel. And I'm Mical Jeanlys-White, the founder and CEO. And today with me is our very own Jacob Stewart. Jacob is back on the pod. We could not be more excited to have our newly minted author. Jacob has also written a book, and he is back today for a topic that frankly, I think a lot of wealth advisors have avoided talking about, and that is, drumroll, cryptocurrency. We are talking about crypto because it is long overdue. A lot of the big institutions have been mute about it, but it is here and it is here to stay. And it is time that we as advisors talk about it, demystify it, introduce it to clients, help them understand what it all means. So welcome to Crypto Day at Wealthmore. Jacob has a ton of experience with crypto, which is why I wanted him to come on and share it as an advisor, but also from his personal view.
Yeah, glad to be here. Enjoy talking about crypto, so it's going to be a good talk.
So let's level set for folks. There are people who are probably still like, what exactly is crypto? What does this all mean? What is all the debate about? So let's just crypto 101. Like, crypto is essentially a digital form of money.
Yeah,
Money is used to exchange services, goods, value, and it is just a digital form of money that's built on what is known as blockchain technology. It is essentially a decentralized ledger that keeps track of every movement of the currency.
that's exactly right. One of the problems that they were trying to solve with Satoshi Nakamoto, who we don't really know who that is, or if it's a group of people or an individual, or we don't really know anything about them. But when the white paper for Bitcoin was written, the thing they were trying to solve was double spend. Like, if you have a digital currency, how does someone not just copy and paste? So I'm not a tech person, but apparently that was the big issue with digital currency is how can we prevent people have a fully digital currency and prevent, double spend, which basically that's what Bitcoin did with blockchain. And I'm not a tech guy, so I can't explain all the features. There's digital signatures, there's cryptography that secures it, which is why it's called cryptocurrency. But yeah, like you said, it's basically a ledger that tracks all the
Movement.
movements of currency on that chain. You have different blockchains, but Bitcoin, Ethereum, different chains that they track all the currency within that chain worldwide, wherever it happens to be.
And I know for wealthies listening to this, it probably feels very mushy, very gray, because you're used to the US dollar, you're used to euros, you travel and you are exchanging a currency and it's paper or coins, right? It's tangible and it's governed by a centralized bank, that country's centralized bank. So this is very different. It's digital. There is no centralized bank. There is no centralized group that is tracking this currency, like we have the Fed, like we have the US Treasury that is tracking the US dollar, and similar structures exist in Europe and all over the world to manage each country's actual federal issued currency. We're working with two different headsets here: paper coins versus digital centralized ledger. Bitcoin launched in 2019. We are 16 years into Bitcoin,
Yeah.
digital currencies, and thousands of other digital currencies spurred out of this. It's here to stay.
It's here to stay. And, there's kind of the pros and cons of it being, a neutral entity. Is not controlled by any banks or anything. It's not controlled by a central bank. And it's really not controlled as far as Bitcoin. And then, it depends on some of the others. It's not controlled by a central source. So like you said, there's pros and cons. A lot of people associate it with, scams, and because anyone is allowed to use it. So it's really open to anyone. So yes, criminals can get on there, scam somebody, use it. At the same time, because it's not centrally controlled, it's not also, you know, going to be used to, like with central banks. We haven't seen this in our country, but some countries around the world, the currency gets diluted so fast. You have $1 trillion banknotes that go and buy a meal or whatever. So there's pros and cons to it being kind of a neutral currency.
No, and let's unpack this because here we are. My career has been on Wall Street, spent 20 years there, very familiar with the process of account opening and having what banks, if you guys remember, or if you've recently opened a bank account, there is what is known as KYC, which is know your customer. And there are a lot of rules to prevent money laundering. So you have to show ID, your social security. And then even once you open an account, transactions are closely monitored. You guys may deposit a check and get a notification that it's going to take 5 days to clear that check because it's a larger dollar amount. All of those safeguards are in place to prevent nefarious, illegal funds from moving through our banking system. So crypto has been very much sort of scrutinized for the lack of those guardrails to know who it is, where it came from, to not be moving money that is tied to bad behavior. Let's just all out on the table. You guys know what it's like to open a bank account. You've had a check deposited where it was flagged or something. These are the systems we have in place to
Mhm.
make sure bad things and bad money are not flowing through our banking system. And
Yeah.
that's been sort of a big focus around the regulation for crypto
Mhm.
is we want to know where this money, this digital currency is coming from, what activities are tied to it.
Mhm.
With having said all that, crypto is now $1 trillion market.
Yeah. Yep. Yeah. And multi-trillion now at this point, I think, or 2 trillion. But yeah, so like, yeah, in the early days, I think a lot more of crypto, or like the percentage of people using crypto, a lot higher percentage was used in probably shady things, scams, and all that. It's becoming a smaller and smaller percentage of what crypto is being used for. Becoming more and more mainstream, like you said. Obviously, those things still happen. My last job I worked at, had a client that they rented a house. They saw an ad online. They contacted the phone number. They gave them a code to go in and tour the house. And then they said, yeah, we like the house. We're going to rent it. They said, okay, well, just put the first month's rent and deposit and take it to a Bitcoin ATM and send it to us there. And ended up this person was somewhere outside the country. They had spoofed the ad and had basically, I guess, gotten someone to give them the code. Like someone went and toured the house from the legitimate ad and got the code so then they could give it to other people or something. Anyway, the folks, they thought they were renting this house, and then the landlord actually showed up and said, I've not rented this house to you. How did you get in? And like they had already moved their furniture in and everything. And so these are the kind of stories that people hear and they want to stay like, oh, stay away from crypto. But, not to try to tell people, crypto's necessarily the right investment for you, but this kind of stuff happens in cash all the time too. So like cash is still the number one currency used to do shady deals, criminal stuff. It, that's the thing that's like concerning someone that's happening with cash. The US dollar is the number one trafficked money or laundered money in the world.
Yeah. And this is why it's so important for us to help people frame this, right? $1 trillion space. It's still a baby asset class, 16 years versus our stock market is over 100 years old, right? So you're sort of putting these things in perspective. Anything new, there will be bumps along the way. There will be gaps and unintended usage of things that regulation now needs to sort of come in and safeguard. And to your point, less of the bad stuff is happening. We want more of the good stuff happening.
Mhm.
And that comes with the school of hard knocks with anything new.
Yeah. Yep. And there are a lot of good things that are happening. More so, I would say, in countries where the currency is less stable, where people have less access to banks. In a lot of countries, we take for granted, the banking system that we have. But although I will say, even here, once you kind of get kicked off the banking system, it's hard to get back on. But in other countries, like that's not even an option, for a lot of the working class folks. Unless you have a lot of money, you don't get on the banking system. This is one thing that crypto has helped a lot of folks in other countries that have more restrictive banking systems, and then currencies that devalue very quickly. Crypto, Bitcoin, USDC, or stable coins, they've really become used a lot in those other countries that are a way to save their money when your currency is losing 10% a week or whatever. You can put some money in dollars or Bitcoin or whatever,
Like,
and keep the value.
and it is becoming such a normal part of the investor landscape. The most recent studies show that roughly 15 to 20% of Americans own crypto or have owned crypto at some point. Think about, wow, in 16 years, just how quickly one has gained adoption. So we definitely do not want to turn a blind eye to just how prevalent it is. And frankly, younger investors have embraced it.
Yeah, that's what I was going to say too, is that number is probably a lot higher among, younger folks. You probably look at people under 40, that number goes up a lot.
Yeah,
Yeah.
yeah.
You folks like myself grew up kind of in a tech world already. And, folks even younger than me, like I didn't get my first smartphone until I was in my 20s. But, you know, younger folks, they've had a smartphone since they were a teenager, and the technology is just very much a part of their everyday life,
Exactly.
more comfortable with, digital currencies, digital everything.
And to your point, Jacob, for younger folks, even money feels digital, right? Like if I'm paying you on Venmo or Cash App, feels digital, right? Like the USD feels digital to me. It's not necessarily like a paper and a coin. Like,
Yeah, coins or paper anymore.
no. So if you grow up, it all feels digital.
I remember a time, but I was pretty young when used cash more. Someone in their 20s today, they may have, most of their life, they probably rarely used cash. Everything's digital. So this is just another form of digital currency. It's a more comfortable.
Absolutely. And I grew up in the credit card industry and, at the height of rewards. So you wanted to swipe everything so you could get rewards. So I would never have cash. I have cash because I need to tip someone, or I have cash because I'm going somewhere where it's cash only, but not by choice.
And so that's kind of another like topic that, kind of goes around in the crypto world is like, you know, the systems with, your traditional currencies, the dollar, the euro, whatever, they've developed pretty efficient systems for moving money digitally. And so a lot of people say, well, why do you even, need another digital currency? But one of the big things that's coming out, and we'll probably see more of this in the coming months and years, but between those systems, it's really hard to talk to each other. So if you think of like money, like language, if you're on WhatsApp, you want to message people on WhatsApp, it's really easy. You just put in their username or number or whatever, you can chat back and forth. But then what if you want to what if someone doesn't have WhatsApp? They have Facebook Messenger, or you've got all these different messaging apps, but different people talk in different apps. So then you have to get that app and you have to get another app. And it's similar, like within a closed loop system, like the US dollar, it's easy to move dollars around within a dollar economy.
Exactly.
But how do you move a dollar over to Europe? And I ran into this recently with some friends of ours that are in the UK. They're coming to visit us. And we were going to get a beach house. And so they were like, we'll pay for the Airbnb. And then you just, give us reimburse us with your portion. um, afterwards. We were like, that's fine. Then we were looking at ways to like send them money, and everyone wants to take like 10, you
Yeah,
know,
the heck,
8, 10% to get the money over there to them in pounds, right? So that's one thing where crypto or Bitcoin is probably going to have a big use case in the future, is because you can move money from dollars to Bitcoin, then back to pounds, and it's in a fraction of a few seconds, and the cost is pennies. And I don't know if you follow the crypto space very much, but SoFi recently launched a service where they're going to use that. So it's like a universal money address, and basically someone at SoFi can send money anywhere in the world that someone else's some other bank or whatever is also on the standard. And it's like an email address. You have your username at SoFi, and then you can send them dollars. And if you're sending it to someone in the UK, they would get pounds. Fees relatively low, and the time is really quick. It's fast transaction.
yeah, it's a very powerful use case where, in essence, Bitcoin becomes almost like an international currency, normalizes all the different ones. And that's
Hmm.
pretty powerful, like use case for money transfer, right? Moving money easily, not having surprises, even when you go overseas and you buy things and then the exchange kicks in and you're like, oh, it was more than I thought. Like it
Hmm.
removes a lot of that two, three, four steps when you're dealing with like cross currency transactions.
Yeah. Yeah.
Yeah.
Because the digital money's become like the digital currencies of the nations have become really good, especially in places like India. I think they've all built on one platform, so you can pretty much use any app. We don't have it as easy here because, like, if you want to send someone Venmo, they have to have Venmo.
You have to have Venmo.
From what I understand from like in India, their system, all the apps are built on the same system. So even you can send money across apps instantly. That could even happen here with Bitcoin being the underlying, like you could send money from Venmo to Cash App, but this moves across Bitcoin really quickly. And you don't even ever have to own Bitcoin or touch it. It just moves across there. So then all the apps are talking to each other.
So, wealthies, now that we've grounded you guys in what is Bitcoin, how big it is, the various use cases, and the money logic for it, here's what's the latest. The regulation is ongoing. We will continue to see regulation in this space. You're still going to see volatility. That's also been sort of a hallmark of Bitcoin, is that the prices can fluctuate on any given day between 10 to 20%. To put that in sort of comparison, the market goes wild if the S&P moves by 1%, right? Like you will see every talking head is like, whoa, what is happening over 1 to 2, and God forbid it gets to a 3% move in a day, but crypto is highly volatile.
Yes.
10, 20, 30% swings can happen in a day. But again, baby currency, baby asset class.
Mm.
As these things mature, I'm sure you will see less of that volatility as well.
Yeah. And the volatility has been one of the main like talking points about Bitcoin and why you either want to get in or why you want to stay away from it. And like you said, it's a baby investment class. And when it was much younger, even the volatility was much higher. As it has grown, the volatility has gone down. In fact, a lot of people are complaining, well, specifically on Bitcoin, but there's other ones that are smaller that are still much volatile. But like on Bitcoin, people are even complaining about how boring it's become, and somewhat with Ether or as well, because it doesn't have the swings where people can make as much money doing day trading or whatever, folks are doing with it as much. So it already has matured some, and I think you'll probably even see more of that as the market cap gets bigger and bigger.
Yeah. I think that's a good thing for the everyday investor who is a little more the traditional investor versus those that might be day trading and looking for like quick profits. That's a whole different story. And that is probably not our wealthy audience, but about versus the asset class is something to consider. But the other thing that is evolving with crypto is we're seeing crypto ETFs come into the market. That's a major inflection point. At the point in which you make this an ETF, you're trading it on the major exchanges, that's a massive validation, normalization, whatever you want to call it, of the asset class.
Yeah, for sure. And I think the ETFs right now are a major driver of the price right now. They're gobbling up a lot of Bitcoin every week. So the other thing is, I think the ETFs have brought, that's part of the reason. If you look, and maybe we're getting a little too much into the analytics of it all, but if you look at when the ETFs started, the volatility started dropping significantly as the ETF were involved, because people who buy the ETF are probably using it more as a addition to their portfolio, and then that gets rebalanced. So if the price is going to go too high, eventually they're going to start selling some of that off to spread it to the other. If they're putting a 10% allocation or whatever to their portfolio, it's going to go up to 15%. They're going to start selling some of that off, and that's going to hold down the volatility. And then as it drops, they're adding to their portfolios. So it's going to help stabilize. It has already helped,
Absolutely.
stabilize the price. And like you said, it's brought a lot of legitimacy to the investment, which has then brought a lot more institutional money. So less speculative money and more institutional money has flowed into the space.
For lack of a better term, it's like the adults have entered the room.
Yeah, exactly.
The regulators, the institutions who come at this with a very structured approach to investing, to your point about rebalancing, and then frankly, the heft in which they buy. So now you're coming in, institutions are not buying one, two, they're buying in mass quantities, move in mass quantities, and that weight ends up having a outsized impact on volatility, frankly. It's a never
Yeah,
thing.
it does. Yeah. Kind of going back to your point of, people adding it to their portfolio, I think even before a lot of people understood maybe the use cases for it, they just saw the returns
Yeah,
and they're like, I want this
I want in.
in my portfolio. Yeah. I don't know what the returns are from the very beginning in 2009, like with Bitcoin. Returns are in the hundreds of thousands, I think, percent. Just looking at the last 10 years, from 15 to 25, if you annualize it, like 81% return, I think, is the annual return per year, average annualized return. So those kind of returns are why people are adding it to their portfolios.
So I want to double click on this because in our last episode, we did a look at 2025, what's in store for the remainder of the year, and what investors can expect in 2026. Matt, our CFA, came with all the data, including the returns on crypto. And if memory serves me correct, crypto was trending just this year at 20 to 30% returns. But that's also not talking about the volatility that's come with that.
Yeah.
It is those sort of returns draw people in, just those folks who maybe have a higher comfort with the volatility that comes with it as well.
Mhm.
This is a great way for us to now sort of talk about crypto as an investment. We've been unpacking its history, what it is, its use case, what's coming next for it. But I want to hear from you, Jacob. What made you start investing in crypto, particularly as incumbent establishment has had a very negative view on it? You know,
Yeah.
Mhm. The historical view on this has been quite negative. Many firms did not offer crypto, did not want to talk about it. And along the way, we've seen some pretty big bumps. We've seen FTX, we've seen the other one, Binance. There's been some pretty big bumps along the way.
There has. Yeah, so I was one of those that was a skeptic. I thought it was a dumb idea. And I was actually following Bitcoin early years. Not following it as in like I was a fan, but I just knew about it. So I thought, well, that's kind of a dumb idea. Why do we need a digital currency? We've got a good currency, the US dollar. I thought it was just kind of a weird fringe deal, but I didn't think a lot about it. Then as it started keep going up it kept going up in price, and I was like, what's going on with this thing? I think about like 2014, 2015, I put a little bit of, research into it, and I thought, hey, well, it's not a dumb idea. I think it's an interesting idea,
Yeah.
but not something I wanted to invest in yet. So then, time goes along a little bit further, and I start putting in more research and start reading some books on it. And that's when I really started seeing, well, this is actually a pretty brilliant technology. And it's also something I could see being useful. And I started investing. And then I really started researching a lot of the other crypto, which we haven't really we maybe briefly talked about, but there's tens of thousands of different things out there.
Ethereum, Solano, the list.
You got the big ones. Before we came on this podcast, I did a quick search to say how many crypto coins tokens are out there. And it was anywhere from 24,000 to 37 million. So, I mean, it's even hard to track exactly what's out there. One of the downsides is that this technology is pretty easy to replicate. So anybody can create their own blockchain, and now you got the meme coins and all this, so it's important to like distinguish between what's out there that's just a scam and just, pump and dump, a celebrity will create a coin, people start buying it up, they'll promote it, pump up the price, and then they'll dump all their
Coin.
coins on it, and then it dilutes the price and it becomes worthless, and then they've cashed out, several million, or even in some cases hundreds of millions of dollars by dumping it on the public. And so when we're talking about crypto, like, we're not necessarily talking about those meme coins. Those are pretty much just, collector items, or I would kind of classify them that way. They're not being used in any meaningful
Like
way.
special edition stamp.
Yeah, exactly, something like that. um but yeah, so I kind of came into this space investing in Bitcoin. I invested in some in Ethereum and some others that I thought had some potential. And then, you mentioned FTX. That happened not long after I got into the space. So I was tested by fire. Like,
Straight into the deep end.
yeah. So, and also the stable coin and Luna was, I think, the crypto, and the stable coin, I forget what it was called, but it was basically supposed to be pegged to the dollar,
Yeah, I remember
but
that one.
it had no reserves. Thankfully, I stayed away from that one, but it had no reserves. It was an interesting concept where the algorithm basically, so if people start selling a stable coin, it's going to push the price down, right? So someone has to buy them up to push the price back to whatever it's supposed to be tracking, the dollar or whatever. So as people sell those, the foundation or whatever that managed the peg to the dollar, they were supposed to buy up those excess ones. But you need assets or whatever to do that. So they would issue Luna tokens, which were their cryptocurrency. They would issue those on the market to sell those to get cash to buy up someone, pretty much saw through that and just dumped a bunch of the stable coin on the market. It lost its peg. The foundation tried to buy it up, so they started issuing tons of new. Well, that crashed that crypto, which then they couldn't hold the peg anymore, and then the whole thing just collapsed within like a day or two.
Wow, so all those investors just pretty much.
Just lost everything. And if you thought you were in a stable coin, you're like, oh, I'm in a safe, it's pegged to the dollar. People had hundreds of thousands or millions in that stable coin that basically lost everything. So this was a couple years after I had gotten in the crypto space. So this happens. Then like 6 months later, FTX goes under, and a lot of people lose their money that way. So it was a very turbulent, I think that was around 2022, but very turbulent time to be in the
But I'm so glad that you share the education journey that you went on, from skeptical to let me go do my own knowledge gathering, understand this space. And then as you built your knowledge base, even categorizing these things, which ones are meant to do what and which ones are real versus which ones are not. And then even double clicking on stable coins to be like, what does stable really mean?
And a big wake up, because if a stable coin doesn't have the reserves to back it, you probably don't want to use it. And that's what a lot of a good regulation that's coming out is ensuring that stable coins have the proper amount of reserves.
So glad you mentioned that because that starts to make it feel like a bank.
Hmm.
Every bank has to have a certain amount of money sitting in the vault so that when you hit the ATM, the cash is there. So think
Yes.
that in that similar comparison. And if it's not, Houston, we have a problem.
Yeah.
So this is the same issue in terms of circulation of currency and having the reserves and what that means if it's not there. Still, even with FTX, with stablecoin, sort of found your way through this new world again, 16 years, baby currency, still
Yeah.
evolving. Regulators looking at these different ones coming into the market and figuring out in order to protect the consumer, whatever you believe about regulation, the intent is to protect the consumer, figuring out like what guardrails do we need so that people don't lose their money.
Yeah. Yeah, and that's good regulation that's coming along that's going to mature the space. It's going to make it more legitimate. It's going to make it better for the customers. Even though I kind of rode through the rough waters, I never cashed out. I didn't throw in the bucket because my research had basically told me this is a promising technology. This is something that's usable in the future, especially as we become more and more digital. And I think in the early days of Bitcoin and other cryptos, like the idea was that this would replace the dollar or the euro. I don't think that's ever going to happen, or maybe, many years in the future. But I think the dollar, the currencies of the world that are, dominant currencies, they're gonna stay around. But I think these currencies are going to basically work alongside the crypto space, and they're going to get more and more involved and more intertwined as time goes along.
And point about the ETF. So, guys, Jacob is a trained professional. He is looking at this, and I would venture to say he is putting what I would say risk capital into it. I would venture to say Jacob did not bet the farm on this. He did not liquidate his K. He did not take a second mortgage out on his house and say, let's jump into the deep end.
Yeah, very good point. When I started investing, it was with money that was above and beyond what I needed for my financial plan. So if I lost that money, now there's a popular phrase like only invest money you are willing to lose. I didn't want to lose the money, that's for sure. I only put money in things I think are going to work. But had the money just, been lost and evaporated, my plan was still on track. Like my retirement was funded, everything would have worked just fine. That was money that was high risk capital, like you said. Like it's money that can be put at a high risk for the high reward. And
Got it.
so far it has worked well. Obviously, Bitcoin's up at, close to all-time highs now. So, it's been worked well. But had it not worked, like had it just gone, to nothing, I would have still been okay because it was money that was not necessary towards my goals and my plan.
Yeah. This is so important, guys. Even when you're putting risk capital at play, Jacob was making an informed decision. Looked at his financial plan. He'd done a boatload of research, went deep into understanding before he even put his risk capital at play because risk capital could go to many different options. There are other alternative investments that are, good ones or options for risk capital, but your research. And this is where I'm sure you guys have heard me talk about the burger and the fries, but back to burgers and fries again. The financial plan is the burger. It's secure. The fries are the risk capital. Like, put a few fries into crypto, money that is not going to put your house at risk, your retirement plan, your kids' college future. That is what we mean by risk capital. I don't want to call it play money because I don't play with any of my money. I'm going to call it risk capital. But that's sort of how we think about this in terms of a new asset class that is still evolving, still a long road ahead. But the underlying technology, and I think that's where everyone sees a bit of the genius there, is in this like blockchain technology and what it can do, has viable use cases, has problems that it solves, and is not worth to ignore altogether, but putting risk capital.
And even if, you invest in something that's high risk, like, Bitcoin or whatever, and you invest the emergency fund and you invest the retirement fund and you invest everything in there and it works out great. But even the volatility along the way can derail you. That's why it's got to be money that you can set aside and money that you don't need, in the near future. I've seen a lot of folks in the space lose money even as the asset has appreciated because they had to cash out on a downswing. And like you mentioned, we can see it wasn't actually that long ago. I think we saw maybe it was in July, a 20% drop in the Bitcoin and maybe a 30-40% drop in the overall crypto space over a 1 week period. So if you've got your emergency fund or your other funds that you need and they drop
That's a
and then you
problem.
need to withdraw it, you've got to take a loss on it, or at least, even if it's not at a full loss, it's a loss at what the potential could have been. So it's got to be money that, is money that can be set aside, risk capital that's got a long-term time horizon.
You got it. And I've heard too many stories about people losing money that they really needed to have. I've heard stories of, frankly, within couples hiding what's happening with crypto investments, just squarely financial infidelity, which we do not recommend, where one partner thinks the other partner exited their crypto positions, but they did not, and the asset is not where the other partner thinks it is. So those are things that clear indicators that it's not risk capital. It's creating or could create a real financial issue. If you find yourself treading towards financial infidelity in your relationship, that's another big red flag. So those are things to be on your radar. But again, back to that, understand this is a new asset class. Think of it as putting risk capital at play and doing your homework. Do your
Yeah.
homework.
And since we're talking about appropriate ways to invest in the space, it's again I think I mentioned it earlier, like a lot of people tend to want to day trade it or do short term, like, oh, I'm going to get in here, go up 10%, I'm going to get out. That's not really a good way to invest. If you're going to invest in the crypto space, it should be for long term. You know, there's a lot of news that's going to come out and shift the space from time to time. But if you just set it and forget it, like with stocks or any other investment, usually you're going to outperform all those people who are trying to capitalize on those news cycles and stuff like that.
Yeah. Whether it be the equity markets versus crypto, the historical data on trying to time the market is a fool's errand. Like that is proven. Trying to time the market, trying to predict what thousands of other investors are doing, and then you add the technology and the algorithms at play, it is not wise.
And even if you see a pattern, like every time, X, Y, and Z happens, the price goes up or the price goes down. There's always a new time everything happens. There's always a surprise, involved. Trying to think recently, there was something that came out. I think that they were going to potentially drop interest rates, and that usually sends risk assets up. And I think they actually went down or something. And I remember thinking, well, a lot of people that tried to trade on that news got.
Yes, we saw it. I think we were watching what happened with the Fed's talk at Jackson Hole, and it was doing wild things in
Yeah,
the crypto
but
space.
Well, that's what it did. Yeah. So like all the risk assets went down for some reason. And I was like, I bet a lot of people who were going to trade on that news got hurt. Because the news is not always going to affect the market the same way, whether it's equities, crypto.
Really, because there are just too many factors at play that influence. And
Mhm.
frankly, you still have a lot of irrational behavior that happens in the market. To think that the market is a 100% rational space is absolutely not true.
Yeah, exactly.
Absolutely not true. You may think, well, this is the rational thing that the market should do. And then based on whoever is like absorbing that information and what they walk away with it can
Mhm.
dramatically impact
Mhm.
the fact that we touched upon the ETFs because I know younger investors are into crypto. I feel like I live in two different worlds. When I talk to younger investors, they are very much into it, understand it, are willing to dabble in it. When I talk to older investors, their favorite word, and I'm sure you can guess it, is crypto is gambling. All right. So it's still very polarizing.
Mhm.
Regulation is going to impact this space. Large financial institutions bringing certain cryptos into ETFs means that the vetting that you, Jacob, did on your own is happening in a structured way. If it's making its way into an ETF, there is a desk, there are analysts, there are people, just which ones come in, which ones are viable. So now comes this level of institutional oversight scrutiny. And these are regulated institutions creating this. So they have another level of regulation and scrutiny that goes into what they even put into their ETFs. So be a more guardrailed way to put risk capital into crypto.
Yeah, and it's kind of a good way to compare with like FTX. People invest in crypto, Bitcoin or whatever. They held it on the exchange, but because the exchange was not really regulated at all, I think it was headquartered out of Bahamas or something, had no real U.S. regulation at all. So the assets that were supposed to be there weren't there. They were taking them and doing other stuff with them. And so when it collapsed, people literally had nothing. Although I think some of them are getting that back. They had clawbacks or whatever. They're going to get some of it back. But with an ETF, with the regulation like you're mentioning with the SEC, that's not going to really happen within an ETF. If you invest in a Bitcoin ETF or the Ethereum BT, the assets are going to be in that ETF, backing it, dollar for dollar or whatever your investment is. Um, but yeah, it's a huge boost in confidence that people can invest if they're wanting to get into that space. And
Exactly.
they're not going to put an a meme coin or, something in an ETF. So they're kind of weeding out the bad ones for the most part as well.
SEC is highly regulated. We are we are RIA in a regulated space. We have a fiduciary responsibility in terms of which investments we make available to Wealthmore members. So the folks creating ETFs, making them available to us to even put them into our Wealthmore portfolios, have that equal, even more so oversight. It's why you get a prospectus. They have to disclose things, the rationale. So far more scrutiny, and this is a good sign for the industry. It comes with becoming sort of a mature asset class, though I'm sure some people would be like too much regulation, but it's meant to protect you as the consumer and frankly take some of the homework off of you because there is a whole professional team that is vetting that, assessing it, looking for whether or not it's worthy of being an investment that they would put against, their own names as to why we created this ETF.
Yeah, yeah, exactly. Yeah,
Those of you who are looking for a massive dopamine hit, the regulation maybe is taking that away for you. But for those looking for, hey, potential asset class that I want to put some risk capital into, I think this is all very good news.
for sure. Can be depends on who you speak to as a portfolio manager, but it can be another asset towards your portfolio that maybe doesn't move in the same way as stocks and bonds. It's kind of a third, space now that um, it's always good to add into a portfolio, things that are not 100% correlated. That way you have, when one thing's down and the other's up, you can kind of balance it out. And that way you get a higher average as things are moving different, at different paces and stuff. So this is kind of another space now that we have as a portfolio manager to kind of add a little different return into the portfolio.
Yeah. As we wrap out this episode, Jacob, what are maybe the top two or three things that you want wealthies to take away for those of you who are already in the space or those of you who have been on the sidelines? Maybe you're just learning and you're here listening to be like, what is this? How should I think about it? But we wanted to bring you this distinct perspective from a wealth advisor, trained professional who's had the opportunity to look at this as it's evolved from baby to, I guess, I don't know, is it a minor now, a teenager? Sounds like a teenager.
Yeah. It's in its teenage years. Yeah, so I would say the probably the top thing would be there's a lot of information out there. We live in the information age, and there is a lot of information out there about crypto. And I don't know that I would say most of it's bad, but there's a lot of bad info out there, and people have you know bad motivations in some cases in the information that they're putting out there, to try to get you to buy something, and then they turn around and dump it on you, or whatever. So there's a lot of bad info out there. So stick to trusted sources. And when I say trusted, I guess professional sources, investment companies, advisors that are credentialed. Don't follow some guy that's just, yeah, he just started his own podcast and is going to talk about crypto or whatever. I don't know. But trusted sources that are going to give you good information, because there's a lot of bad info out there. The other thing is, crypto's not for everyone. It is a highly volatile asset, risk asset. And so you have to have the risk tolerance to be investing in it.
Yeah, love that one. Double click on the risk capital and risk tolerance, which
Yeah.
yes, so it has to be risk capital and you also have to have the tolerance for 20-30% swings in any given day.
Yeah. N- what I say to my clients a lot is everyone has risk tolerance when it's going up. It's when it drops that you find out, oh, I don't have the risk tolerance for this asset. So don't wait for that to happen. Don't, invest in it and think, oh yeah, I'm all about this risk. And then it drops and you're like, oh, okay, I'm ready to flee to safety, because that's the worst time to flee to safety, is you've lost capital. Um, just, do your due diligence beforehand. Am I really comfortable with like 20-30% drops? And talking to an advisor or someone like that can help you determine, am I a risk taker or not?
Guys, that's why I stopped riding roller coasters. I was good on the way up, and then they get the thing to the top, and I see the drop, and I'm like, whoa, why am I here? Why am I here? I don't need to be here. Like, there are other ways in which I can have fun. So, you guys should look at it the same way. Like, it's all good as it's going up, and then you sort of hit that peak, and it starts to go down. And, you might be like me wondering, why am I here?
So yeah, that, and then we already talked on it before, but don't risk everything on it. Too many people, they get excited about it. It's a new space. It's going to do wonderful. Let's put everything in there. Don't do that.
Absolutely. Wealthies, if you guys are thinking about crypto, have cryptocurrencies, need a little more guidance, please schedule one-on-one. You can go to wealthmore.net. You can schedule one-on-one with Jacob to talk about it, or any of our other advisors. But we say this all the time. Investors with wealth advisors do better. It is because advisors are looking at these assets. They are thinking about how they fit into your long term plan, and they have the knowledge, they have the curiosity, and they're here able to give you a balanced approach. But the number one objective is to make sure you stay on track and hit those goals. And maybe for some of you, that might dampen your enthusiasm, but hopefully for most of you, it shows you a path where the options are there, but they're done in ways in which that keep you on track and make sure you hit those long-term goals.
Yeah, exactly. Yeah, so those are my top 3.
I echo and 100% agree. Guys, thanks for tuning in. This is All the Wealth. Until next time, stay on track, keep building your plans, and we'll see you guys soon. All the Wealth.